more pain to get the supply chain, and that's the real risk.
You know, there's so much to talk about Boeing, of course, that pending capital raise as well. But I want to switch gears for a moment here because you're watching Spirit shares really surging today, up almost 30%. There's a report in the Wall Street Journal out this morning saying that Frontier and Spirit may revive a deal. It would have to happen through bankruptcy. However, how do you view this? Because you look at just where Spirit has come over the last year, just how much the stock has deteriorated, and what would this deal really mean for both companies if they are able to get it done?
Yeah, it's something I think not totally unexpected. Look, I think in the beginning, you know, when Frontier and Spirit were going to put themselves together, that was a much better, much more natural fit. The airplanes, they both fly the same type of airplanes. They're both ultra low-cost carriers. So to me, again, I thought that was a more natural fit. I think JetBlue stepped in the middle of that because they didn't want to run the risk of having a much bigger competitor. I think there's a surplus of economy seats in the marketplace right now. So if I'm Frontier, I don't want to pay up for economy seats. So I think that's why, you know, the thought process is there's got to go through some sort of purge that would get rid of some of the debt. I think they've got to be ready to, you know, buy this thing pretty cheap because the value of it's come down pretty significantly since their initial deal. But again, I think the product and the aircraft that they fly, it's all pretty similar, so could be interesting.
George, we thank you so much for your analysis. A lot going on in the airline industry right now. That is George Ferguson from Bloomberg Intelligence. And coming up, the chairman of EQT naming his top worry for the business, it's not higher interest rates. We're going to talk about what he's thinking about next in our Wall Street beat. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes.
Oh, that's quite the outfit you've got on.
Yeah, as we can see, you know, we can chat in real time to ChatGPT. And not only that, we can interact with it with video as well.
And I swear, like, if you look at Barrett's GPT history, it's all equations like this.
Now that you know you can do linear equations, can you show us something more complex?
I think so. Okay, next let's try something coding related. So let me take out a computer for this. Okay, so I'm gonna open the ChatGPT desktop app like Mira was talking about before. Okay, and to give a bit of background on what's going on, so here we have a computer, and on the screen we have some code, and then the ChatGPT voice app is on the right. So ChatGPT will be able to hear me, but it can't see anything on the screen. So I'm gonna highlight the code, Command C it, and then that will send it to ChatGPT, and then I'm gonna talk about the code to ChatGPT. Hey ChatGPT.
Hey there, how's it going?
Yeah, it's going really well. I was wondering if you could help me with a coding problem today.
Of course, I'd love to help you out. What's the coding problem you're dealing with?
Okay, I'm gonna share with you some code. 1 second.
Sure thing. Take your time.
Okay, so I just shared some code with you. Could you give me a really brief one-sentence description of what's going on in the code?
This code fetches daily weather data for a specific location and time period, smooths the temperature data using a rolling average, annotates a significant weather event on the resulting plot, and then displays the plot with the average, minimum, and maximum temperatures over the year.
Which months do you see the hottest temperatures, and roughly what temperatures do those correspond to?
The hottest temperatures occur around July and August. The maximum temperature during these months is roughly between 25 degrees and 30 degrees, 77 degrees Fahrenheit to 86 degrees Fahrenheit.
As soon as it crossed yesterday, because I thought it was interesting that he didn't put other risks first. However, was he just being human? Was he just saying war is bad and we all agree it's tragic?
Yeah.
Or was he actually talking about, its effect on his business?
I think both. I mean, again, it's hard as a human to look at what's happening at the world and to not be upset with it. But he said, we've gone through this period of high interest rates. We've gone with the volatility in rates markets, and we know how to deal with it. EQT is a great example of this. They have been so active this year. I don't think it's an exaggeration to say one of the most active private equity funds, even though rates are still high. He says, look, we can deal with it. We know how to deal with it. It's the geopolitics that we don't. If we're dealing with multinational countries and they have to trade and trade barriers are getting put up, what does that mean? We were tested and we lived through Ukraine, Russia, but if it happens to a more extreme degree, we're not ready for it.
All right, Danny, great having you on set with us. Thanks so much for joining us. Tremendous interview with EQT. Bloomberg's Danny Berger. You can catch her program every morning at 5 a.m. She gets here very early. Coming up in the next hour, Coca-Cola shares under pressure this morning despite boosting its revenue outlook. We'll discuss the results of the company's CFO, John Murphy. This is Bloomberg.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast, and that's where you will find us. Alex Steele is out today, but not to worry. Emily Grafeo from Bloomberg News is sitting in. Emily, welcome to the studio. A lot of earnings coming up today. We have a lot of the BI analysts scheduled to break them down for us. We're going to check in with Mike Halen. He covers all the restaurants. We'll break down Starbucks. They've got some big changes there. McDonald's dealing with the E. coli issue. That stock is on the move. Carol Pepper, founder and CEO at Pepper International, will give us her market call here as we go through the earnings. Ken Shea is going to join us, Bloomberg Intelligence Senior Consumer Products Analyst. Coca-Cola reported some numbers. It's all about pricing there for Coca-Cola. Not a lot of movement on the units shipped during the quarter, but some pretty solid pricing power. Wendy Thomas, SecureWorks CEO, on the recent Sophos agreement to acquire SecureWorks. So we got a deal stock in the news, and we got the CEO coming on to kind of walk us through what's going on there. Let's kick everything off this hour with Mr. John Tucker.
Hi, Paul and Emily. We're being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Stocks lower for a third day. 8 of the 11 major industry groups in the S&P 500, they are down right now. The biggest drag, consumer discretionary. They're down. That's home to McDonald's, as well as some of the other restaurants. Mickey D's down over 6% after the E. coli outbreak. Tesla, due to report earnings, that comes after the close of regular trading today. Ben Laidler, head of equity strategy at Bradesco Securities, says, stocks should push higher.
A bit of a pause here, I think, is natural, but I think, scratch the surface. This is a strengthening and broadening bull market. I think you're seeing the earnings beginning to come through. I think the economy is running, pretty strong, and those are I think the foundations here.
Yeah, and the parade of earnings continues. AT&T gaining more mobile subscribers in the third quarter than analysts expected. As a result, those shares, they are up just over 2%. You mentioned Coca-Cola reporting an unexpected decline in unit case volume for the third quarter. God bless you. Right now, those shares, Coca-Cola, down 2.6%. Overall, the S&P 500, 22 points lower. That's down 0.4%. The Dow Jones Industrial Average is down 170 points right now. And the NASDAQ 130 points lower. That's down 0.6%. 2-year yield up 2 basis points, 4.05%. The 10-year, 4 basis points higher. Right now, that's at 4.25. That March higher. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Too cold in here, Em? I'm going to turn up the heat.
I have a jacket. I can put it on.
Okay. All right, John Tucker, thank you so much. We appreciate that. Emily Grafeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. What would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. You can visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partners, Material. Fill out now at youtube.com/Bloomberg Podcast. We got that going for us. Looking at the markets here, as John Tucker is just reporting some red on the screen here. Let's see what's happening under the hood, because a lot of companies reporting earnings today, a lot of stocks on the move. Norma Linda joins us, another University of Virginia grad. I am surrounded here.
Wahoo!
Yeah, I guess, whatever. What's going on in the market, Nora? What do you got for us?
Well, there's lots to really dig your teeth in this morning. I'm keeping an eye on Boeing. Of course, we did hear the new CEO saying that woes will take time to fix as a lot of their losses are really piling up. He said, quote, "There are some really big rocks that we need to get behind us to move the company forward." I mean, there are some really big rocks. I am in agreement there. I mean, we're seeing shares of Boeing, if you're looking at it on a year-to-date scale, down 39%. Lots of hurdles that they have to jump over, but another thing that they did mention is that they're not necessarily considering a new aircraft at the moment. So lots to really look
Did
into
they say?
here.
Have they said anything about that? So I guess we're going to get the vote from the union rank and file on the strike. The leadership recommended they vote for it, but we haven't actually seen them vote for it. That's today, right?
Right. So we're waiting to hear on the vote. But another thing that I did want to point out is that they did report negative free cash flow. It came in at $1.96 billion. The estimate was $1.87 billion.
Yeah, that's not good. And the cash flow was the story for this company. How long can they really last with this strike? Planes aren't going off the assembly line. Cash isn't coming in. So they've also talked about raising some capital. They have a big shelf offering out there.
We
so
need the people.
A lot of moving parts out there. So hopefully the first stage is getting this strike settled today. What else?
So I'm also looking at Starbucks. I know this one is for you, Paul. Emily, are you also at Starbucks?
I'm not a Starbucks girl.
No?
Not a Starbucks girl?
Dunkin'?
More Dunkin'.
More Dunkin'.
Really?
Okay.
I always wondered if that was like a northern southern thing because everyone went to Starbucks in Virginia, but then I moved up north and people in Jersey said that they hit up Dunkin'.
I don't know.
Well,
We'll find
Starbucks
out.
coffee is too strong,
Terrible.
I think, for a lot of. You can't say that. You can't diss companies on the air here.
my
Just say it's too
opinion.
strong in your opinion.
It's too strong. Well,
Maybe.
I know Paul likes it. You have
Yep.
your double short something another.
Double short mocha. Let's see. Yeah, nice.
Not too complex.
Yep.
Well, the company did pull its 2025 guidance, and this is after a third straight quarter of sales declines. I mean, they've really been struggling here. Of course, we know that they have a new CEO, Brian Nickel, that did come in, I want to say from Chipotle. And so he is really trying to see a turnaround story here. But they did report in their most recent quarter, 7% decline in same store sales for the latest quarter. So lots that Brian here has to get figured out.
And we're
here.
going to talk to Mike Halen coming up in just a moment on Starbucks and McDonald's. He's from BI. One of the things Mike pointed out was something that I felt, which is now with all the electronic ordering, you don't have that, let's just go hang out at the Starbucks cafe feel, which I think had some real value and attracted customers and maybe loyalty. Now everybody's just going to zip it in the app, and so the line to pick up is like 20 cars deep. I go into my Starbucks, there's like 2 people in there.
Exactly.
So
or maybe
that's changed.
Maybe if you're hanging around there, you might want to get a pastry as well after you got your drink.
Upsell. I
Some
see
more
what you're
purchases
saying.
there, but that's not really happening as much anymore, I'm
But
sure.
you do hear about like teens and Gen Z hanging out in Starbucks.
All right.
Are they really?
My most recent Starbucks story is I go into the one in Summit, New Jersey. School had just gotten out for the day. I unfortunately got right behind like 5 little boys, 4th grade. The backpacks are bigger than they are.
4th
and
grade.
they order these drinks that you have to conjugate, and I would actually probably card them to see if they can get these drinks. There's so much sugar. And
Starting
literally,
them
for
young.
each person, for each kid, the bill is like $12.
My
and they just
God.
use their phones and they tap and they go. So I was blown away by that because my kids
Times have
never had
changed.
that experience.
Times have changed.
Anyway, so all right, Mickey D's, what's happening there?
Well, I mean, it's really some interesting news here. I mean, we do know that there's been an E. coli outbreak, and it's affected quite a few individuals, quite a few hospitalized. We even have one death that came from this, and this seems to be linked to their quarter-pound burger. I'm not a McDonald's person. It's not my place of choice. I'm more of a Chick-fil-A. For some reason, it feels a bit healthier to me. But this is some really scary news, especially for those who are thinking about it from an investor standpoint and also customers.
My McDonald's order since like, I don't know, high school has been a number 2 with a Coke.
To be
I'm in
clear,
and out in
the
like 30
CDC says it suspects it's the sliced type of onions that were put on the
Interesting.
burgers
On the quarter pounder.
specifically,
The
but
onions.
the investigation continues there.
That stock, biggest intraday drop since March 23rd, 2020,
Yep.
which was
Wow.
the
Yep.
COVID
Pandemic.
bottom.
Yep, COVID. Interesting.
Yeah.
All right, Nora, thank you so much for that. A lot of earnings to keep it on top of. Nora Melinda, she covers the equities, all the stock market for Bloomberg News, joining us here in the studio. Let's go right to the man himself, Michael Halen. He's the senior restaurant analyst for Bloomberg Intelligence. He's been all over. Busy day today with the McDonald's news, with the Starbucks earnings. Hey, Mike, let's start with McDonald's here. Boy, if I were a long-term shareholder of McDonald's, I think I'd be buying stock here today because nothing's fundamentally changed other than this short-term, really unfortunate incident out in the West.
Yeah, I guess the question is going to be how short-term is it, right? Obviously, it was a tragedy. Somebody's passed away. You have 10 people in the hospital. That number could expand in the coming weeks. So yeah, I guess it's going to depend on when customers are going to feel comfortable going back to McDonald's. We think that some negative sentiment could linger. Obviously, this company has gotten ahead of itself in terms of pricing, and customers, especially low-income consumers, have pushed back by visiting less this year. And so, I think the timing of it was kind of bad. In terms of where the stock's at, I mean, the stock's been ripping higher over the last couple of months. It makes us think that they finally kind of hit on value and we're able to attract people back with this $5 meal in the last quarter, right? But with the stock near all-time highs, man, that's I guess that's a decision investors are going to have to make today.
So for the next earnings report out of McDonald's, do you expect any type of hit either to the sales or any earnings metrics that has to do with this E. coli outbreak news?
So this is going to impact the fourth quarter. So we think this is going to have a meaningful impact on the fourth quarter, and it'll probably bleed into early 2025 as well. We think traffic and same-store sales are going to get a hit because, I've been on TV 4 times already today. I'm sure all the major outlets are covering this story. And so it's going to turn a lot of people off from McDonald's, and I think there's going to be a lot of people out there that just may not feel safe eating in their local McDonald's. So I think it's going to impact sales and traffic and earnings for at least a few quarters.
And Mike, aren't the vast majority of McDonald's, aren't they franchised versus company-owned?
Yes, yeah, they're 96% franchised. So, yeah, the largest impact is going to be to the franchisees. That's a great point, Paul. Franchisees are going to suffer the most, because McDonald's is so heavily franchised. They'll take a top-line impact, but there's less operating leverage in that model, right? And so because of that, their earnings aren't going to get hurt. The last big example of this was Chipotle. Chipotle owned all their stores. Yeah. And so when their same-store sales dropped 20% in 2017, their margins got decimated, right? Because there's just a lot more operating leverage in the model. So, for that reason, there's a lot less risk to the McDonald's story in this case versus what we saw with Chipotle back then.
So, Michael, Paul said that he's been ordering the same thing from McDonald's since high school. I imagine that when he first ordered it, maybe the burger was $2.50. I want to talk about pricing, though. How is McDonald's doing right now with being able to raise prices with a consumer that is kind of constrained by higher interest rates and inflation right now?
Yeah, it's not just them. It's all of the restaurant industry, but especially quick service. 30% of their transactions are made by low-income consumers, and there's this K-shaped economy, right? Where if you own assets, right? If you have a lot of money in your 401k and you own a house, and you're doing pretty good, right? But inflation has squeezed the hell out of low-income consumers now for 4 years, and they're just shopping at the grocery store more often. They're cutting back on their visits. They're cutting back on their checks when they do go to the restaurants, right? And so McDonald's franchisees, because they're the ones that set the pricing, and everyone else in the restaurant industry is struggling mightily to raise prices on their consumers this year. And and the rising, ever since the 50 basis points cut, commodity prices have just gone up since September when we started pricing that in, right? And so that's a big concern for restaurateurs, I think, in 2025.
All right, Mike, let's switch gears. Look at Starbucks. SBUX is the ticker to put into your Bloomberg terminal. Stock's off about 0.5% today. It's pretty much unchanged on the year, so badly trailing the S&P 500, which is up about 22% here. What's going on at Starbucks here, Michael?
They played catch up a bit once the appointment of Brian Niccol the hiring of Brian Niccol was announced. Brian Niccol started last month, and he's moving quickly, man. He's making a lot of management changes, and he's aggressively making moves to simplify operations. They're going to rationalize menu items, make it easier to execute, and try to bring hospitality back to the coffee shops, right? They want to free up their employees, their partners, as they like to call them, to get back to knowing the names of their customers, right? And being able to greet them with a smile and friendly service, right? And so that's going to be job one. And then from there, they're going to expand on the marketing side. Starbucks has historically only marketed to its rewards members, right? And Brian Niccol wants to expand that to everyone. Right, and we think that's a smart plan. We think they've been underinvesting in marketing for a long time, and we expect it to pay dividends as early as fiscal 2025.
what has the company said to explain the 7% decline in same-store sales? Because before you came on, we were talking about how you have to wait in a really long line to get your Starbucks. There's less
if you're
foot
doing the
traffic.
drive-through, right? Yeah,
if you're doing
exactly.
There's, I guess, well, maybe some teens in the store, but there's less people in the store. What have they said about really what's driving that decline?
You know, part of what new CEO Brian Nicholas said is like it's largely about the experience. You know, it's become largely transactional, right? They've lost that customer service feel. They've had the trouble executing the orders. You know, a big part of it is, you know, and then he also mentioned that, you know, all of these new menu items that they added to try to bring people in didn't work, right? And then, you know, to your point, pricing has gotten ahead of itself at Starbucks as well. And then China, there's a huge price gap between the prices that they're charging. Sometimes they're charging 3 times as much as some of their smaller competitors like Luckin Coffee and K Coffee. So, you know, price has also been a big part of their issue, and it's something that they're going to address right away.
You know, I've seen some crazy graphics in various articles showing the permutations of the different orders that one could have. And if you're a barista, it's virtually impossible to learn all these. Is there a sense that they got to simplify just the menu a little bit?
Yeah, that was they issued a video yesterday after the close, and that was a big point of emphasis. It was like making the jobs of their baristas a lot easier and their employees a lot easier, right? And so, you know, when an employee is stressed, it's very hard for them to provide the customer with a good experience, right? So this all flows downhill. So making the baristas' jobs easier, making it a more enjoyable environment for them is going to flow down to the consumer, and then it's going to result in better traffic and same-store sales.
We don't have a ton of time left, but I was curious to get your thoughts. You know, Brian Nichols said, the company said that they're pulling back this guidance because the CEO needs more time to kind of think through all this. How unprecedented is that? Just 30 seconds.
No, this is very common. Any good CEO worth his salt is gonna suspend guidance so they have more time to get their initiatives in place. This is a huge company. It's going to take a long time for momentum to start building in the right direction, and this is a wise move.
All right, Michael Halen, busy analyst today here with Starbucks and McDonald's in the news. Michael Halen, senior restaurant and food service analyst for Bloomberg Intelligence, joining us from the BI office in Princeton, New Jersey. S&P, we're off 25 points here. That's about 0.5%. The Dow's off 210 points. And the NASDAQ off about 0.7%. That's 137 points. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's give you the latest economic data just out. U.S. sales of previously, let's call them used homes. Sales of used homes in the U.S. declining to an almost 14-year low for the month of September. A lot of buyers and sellers still waiting for financing costs to fall from the current purge. So the current 30-year is in the mid 6% range. Worst performing stock right now, the Dow Jones Industrial Average. Let's start with that. McDonald's down right now 5.3%. Verizon, best performing stock in that index. And then you have Starbucks shares. They are right now dead flat after sales plunged for the third consecutive quarter. The company also pulled its guidance for 2025. This has actually been a big deal in New England. GE Vernova is going to remove some turbine blades and strengthen others at the offshore wind farm near Nantucket. After one of the high-profile failures earlier this year. It was during the summer incident, a blade from the Vineyard Wind 1 project that washed onto one of the beaches in Nantucket, and a lot of people really got mad with that one. S&P 500, 29 points lower. That's down 0.5%, 58.21 of the index. Third day of declines for stocks. Dow Jones Industrial Average, 240 points lower. That's down 0.5%. The NASDAQ 100, 148 points lower, and that is down just about 0.75%. As for yields, the 2-year up 2 basis points, 4.06%. 10-year, the benchmark is 4 basis points higher. That is at 4, we'll call it 4.25 right now. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Emily, Paul.
All right. John, you know what they have in Ireland besides a lot of sheep and a lot of cows?
A lot of wind turbines,
yes.
And
wow.
I am told that there's a cable they're thinking about laying to the mainland for connectivity with the grid, which would make it that much more viable.
Yeah, I mean, I was surprised how many. First of all, it's, you know, the whole country is basically these beautiful rolling hillsides and all that kind of stuff, and lots of cows and lots of sheep, but also lots of windmills because there's a lot of wind there.
And as we learned from reading the grid, both of us,
yes.
that you always have to maintain that 60, electrons go back and forth in alternating currents 60 times a second. You have to maintain that. That's one of the problems with renewables, especially when you're connecting to the broader grid.
Good stuff. We're on top.
Maintain that stability.
John Tucker is our grid correspondent.
Very
because
interesting.
We both read The Grid.
Palm Desert had a lot of wind turbines as well. I remember I went there for a wedding.
Somebody told me Texas, the big oil state of Texas, they get most of their energy now, or a big chunk of it, from renewables.
Wow.
Wind and sun.
That, as we know from reading our books, is an independent grid.
That is an independent grid.
And how much can you store? Like, how much does it rely on there actually being wind in the air?
I don't know. But it's a fascinating thing. We have the BNEF people. That's what they do. Let's talk about the markets here. Carol Pepper joined us, founder and CEO of Pepper International. Carol, a lot of folks have been climbing this wall of worry about the stocks, but we got the S&P up 22% this year. What are you telling people who are concerned that are saying, oh boy, this market's too far over its skis? What do you tell them?
I tell them, relax. First of all, it's not too far over its skis. There's a lot of good news in the market. And really, as you guys know, I manage money for people with over $100 million. And we're starting to plan what should we be doing post-election, post the next rate cut? Because that's really where you want to look. Just like Wayne Gretzky said, don't skate to where the puck is, skate to where it's going to be. So we need to stop being focused on the election and terrified. Whoever wins, it will be a fair and free election. There will not be another January 6th, I don't believe. So that means we really should be focusing on what is January 25 going to look like and what's going to happen after the next rate cut. And that's all good news. The market is pricing in the fact that we will have lower rates. The election will be finally out of the way, so whoever's in will know how to position ourselves, and there will be a relief rally. So you want to be looking during these fearful days, these worry days, what can I buy that I don't have that will do well in the good times? Because believe me, the good times are coming, no matter who wins. I think we'll have a really strong first quarter next year. And so let's position for that, which to me means growth. Let's look at growth again, because during fear days, growth is what goes down. You see the NASDAQ drifting lower when people get scared, and then when people are excited, the NASDAQ shoots up. So when it's down, this is the time to look at your portfolio and say, what am I underinvested in? How do I get into the strong names that will do well when we're past the election?
So what does growth mean to you? Is that Mag 7, or is that taking on a new, I guess, definition? Do you prescribe a new definition of growth?
No, I think it's Mag 7. I think it's NVIDIA. I think it's things that are going to be working as we go into the future. So that means artificial intelligence, big tech. The big leaders are going to stay strong and get stronger. Names like Starbucks will come back. McDonald's will recover from this blip of, bad onions. And so I always say, bet on the big growth names, because that's really where you're going to see the turbocharging when things are going well. And don't forget, these big AI companies need to have a lot of data centers. That's more manufacturing jobs. They need lower interest rates. Those are coming. So that is only, even though NVIDIA looks like a crazy name with over 500% return in 3 years, it's just getting started. Look at the long-term returns of Microsoft and Amazon and some of the big names, how they've done over 20 years. And you'll be very glad if you put some of these new big names in your portfolio and just close your eyes. Put them in on a fear day and leave them there and say, you know what, 10 years from now, I'll thank myself that I did that.
So you have been consistent on your NVIDIA call there for sure. Now you're talking to us a little bit about energy names. And we've seen WTI crude oil just over the last several weeks really be volatile with some of the escalation and tensions in the Middle East. What's your energy call here?
Yeah, I really think that energy is going to stay below 100, but stay above 50. I really think we're going to be in that band for quite a long time. And, I'm a great believer in renewable energy. I'm a great believer in the new carbon markets that are going to get started. That will be a whole new asset class that we can talk about next year and in 26, where we are offsetting the emissions from these fossil fuels. But I do not believe fossil fuels are going away in any way, shape, or form. It's just a question of how will all the various components of an energy market fit together. And for that reason, I think energy should be a core part of your portfolio. It will go up, it will go down, but it's going to stay in a band, certainly for the next 10 years. And it's a great dividend payer generally. So again, stick with the big names, stick with the Exxons and groups that are going to do well. And frankly, a lot of those companies are very committed to renewable energies, fossil fuels, offsetting their carbon footprint. They really have massive departments now who are doing that. That is not a conspiracy theory. That is a fact. And so for this reason, I think even for any ethical investors, it's an important part of your portfolio.
Carol, how dependent is your bull thesis that you've laid out here on, more rate cuts from the Fed? Because we've seen traders kind of pare back the level of, or I guess the number of rate cuts that we're going to see this year, potentially next year. How many rate cuts does your bull thesis need?
I don't think the number's actually important. I think it's the trend and the trajectory. So is it 4 cuts over the next year or two? Is it 3 cuts? It will be fewer cuts if the market is strong. It will be more cuts if the market is weak. And where those numbers will turn out are up to the Fed, frankly, nothing that we can really project. But I don't see a situation where they're going to start raising interest rates, certainly, because I think they did a great job of getting us the soft landing that we needed. I think we're getting that soft landing. And again, technology, we can't discount what technology is doing in terms of increasing productivity without increasing costs, but at the same time, frankly, allowing for higher wages for the workers. I mean, that's a nice sweet spot to be in, where you can raise your wages and have more productivity at the same time. And I think we're going to see that trend continuing.
Right.
So I'm not really dependent on a particular number of rate cuts, because of course, if the Fed announced fewer rate cuts in the beginning, the market will go down and be upset for a week or two. But the second there are good earnings coming out and we see that the corporations are still strong, the market will come back.
Hey, Carol, thanks so much for joining us. Always appreciate getting a few minutes of your time. Carol Pepper, founder and CEO of Pepper International. Get back to the earnings scene. Lots of companies reporting today. Tomorrow's going to be a busy day as well. Coca-Cola reported numbers. Stock down about 2.2% here today, up about 15% year to date. Let's break it down to Ken Shea. He covers all the consumer companies for Bloomberg Intelligence. Ken, what did you see out of our good friends at the Coca-Cola company today with their earnings?
Yeah, hi, Paul. Overall, Coca-Cola put up numbers that beat on the top line and on the bottom line. And so from an analytical point of view, that's pretty good. But when you peel back the numbers, I think there's some concern about the deceleration in the top line. Now, the organic revenues were up 9%. That's great. But it's higher reliance, it's increasing reliance on price mix, meaning price increases and more profitable products like Coke Zero and the hard seltzers, things like that, as opposed to water. And investors are wondering how much longer can the company rely on that to drive the bottom line? And I think that's pressuring the stock a little bit today.
Bring us up to speed with just how much they've already been increasing their prices, I guess, and how much longer it can last.
That's a great question. In that, back in 2022, price mix was up 16%. It's been decelerating since then. So, you say, okay, so price mix is up 10% or so this quarter. That's still pretty good, but it's the rate of the growth that keeps coming down. I think Coke's got a lot of levers to push and pull, whatever, in order to keep it going. I think it's got a long runway in some of the value-added products that it has, like Fairline Dairy, and like I mentioned, the hard seltzers and things like that. But investors are just concerned that the difference between unit volumes and price mix is widening. And so if you're a reversion to the meanest, you would say, well, at some point, things are going to have to normalize to the point where maybe the top line is not strong enough to hit their algorithm of high single-digit comparable EPS growth.
So, Ken, how historically, when you look at a big, strong brand like Coca-Cola, a global brand, how elastic are their sales? I mean, I can't imagine people trading down from Coke to a store brand cola. Does that happen?
Maybe in some places, but the scanning data that we get shows that Coca-Cola continues to increase its market share in the important markets, particularly U.S. and North America. And so it speaks to the power and the advantage distribution network that it has over really anyone. They really are the 800-pound gorilla in the beverage world. And so I think they can continue to rely on price, but it's really just, in terms of the magnitude. I want to point out real quick, there are two other things weighing on the shares today. You can't ignore the McDonald's news. McDonald's is a big customer of Coca-Cola, obviously. Coke said on the call that doesn't expect a material hit from whatever could transpire at McDonald's. The other thing that the analytical community doesn't seem to be talking about much is Coke paid a $6 billion penalty, basically, or I should say to appeal a penalty with the IRS. There's still more risk with that. In Coke's own words, that could be as much as a $17 billion hit for the alleged underpayment of taxes, since 2007. So I think all three are combining to conspire to put some downward pressure on those shares.
All right, Ken, thanks for your time. Really appreciate it. Ken Shea, folks, he's a senior consumer products analyst for Bloomberg Intelligence, based down in our Princeton office. Again, stock off a couple of percent today. Rival Pepsi also cut its revenue outlook in its most recent earnings report, citing slower than expected growth and unrest around the globe. So it's not just Coke. Coming up, Wendy Thomas, SecureWorks CEO, on a recent Sophos agreement to acquire SecureWorks. That's coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the S&P 500 on track for its first three-day losing streak since early September. Of course, McDonald's helping pull the market lower, dropping right now 4.6% after federal health officials linked the quarter-pounder burgers with an E. coli outbreak. Those shares actually pairing some of the earlier losses. And then you have Coca-Cola shares. They are down right now 2.2%. They reported stronger profit and revenue for the latest quarter than expected. But a lot of the focus on how much of the product the company shipped during the quarter, and that fell short of estimates. One thing is certain in these markets, and that's volatility, according to Amy Wu Silverman at RBC Capital Markets.
And there just continues to be a lot of worry. I think the worry is related to, one, if we don't get a Fed move at all, and then two, if we get some sort of surprise or drag out in the U.S. elections. And these two things are sort of inextricably linked.
Right now, the S&P 500, 20 points lower, 5830 on the index. The Dow Jones Industrial Average down 212 points. The NASDAQ 100, 105 points lower. We helping to keep the losses for the indexes in check today. Texas Instruments, those shares right now, they are up 3.5%. They reported stronger profit and revenue for the latest quarter. Really bad times for restaurants, it would seem. Denny's says it's closing 150 of its lowest performing restaurants. They're trying to turn around their flagging sales. Never been in a Denny's. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Emily and Paul.
All right, JT, thank you so much. We appreciate that. Got Emily Grafeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio and are streaming live on YouTube as well, so check us out there. We had a deal in the data security business a couple of days ago. Sophos, I think Thoma Bravo owns Sophos, acquiring SecureWorks in an all-cash deal. Values the company, SecureWorks, about $859 million. SecureWorks is a publicly traded company. SCWX is the symbol. We have Wendy Thomas. She is the CEO of SecureWorks. Wendy, talk to us about this transaction. Why sell? Why sell to Sophos, and what's the pro forma company look like?
Yes, good morning, Paul. This is a strategic combination of two longtime security market leaders. And so when you think about combining our two agnostic, very open platforms, decades of cybersecurity experience and strong brands in the space, this is a way to really scale up and defeat the adversary at scale.
What does it say about the current market for cybersecurity companies that this acquisition is going through?
The market is really looking for a single partner for cybersecurity, sort of a consolidated platform play that one organization can increasingly address multiple use cases for their security needs, from being proactive about vulnerability management to reactive to detection and response capabilities, all the way to AI-powered platforms that can predict the next cyber attack. And so the scale of R&D required to make that a reality for customers is one that requires scale in organizations. So to take two cash flow positive, growing leaders in the space and put them together means more scaled R&D to be better, faster, stronger for customers.
All right, so what are your customers doing with cybersecurity these days in terms of their spending, their investment?
They are increasingly moving from what I would call preventative cybersecurity investments to proactive cybersecurity posture and risk management. This is all about moving towards increasing prevention. And the reason is that dwell times of threat actors in an organization's environment have gone from months to days to now hours. So with the power of an AI-powered platform, in order to really be able to keep constant visibility about potential holes in their attack surface, right? Those unlocked doors, as I like to talk about, It requires technology to do that, technology to detect that someone's rattling that door handle, and the ability to immediately protect the organization from someone getting in and taking those valuable data assets or encrypting their systems with ransomware.
So you're using an AI-powered security platform. I'm wondering how difficult it is right now to be a company that's using AI when it seems like demand is outpacing supply. Is that a challenge for you guys?
Well, if you think about AI, that's a pretty broad category. And while, natural language processing and generative AI is the hot topic right now, and it has its place in security in terms of things like changing cybersecurity detections into readable language of what's going on to a business person. We've been using AI for a very long time in our platform. We started building it in 2017 for things like machine learning, deep learning, statistical learning, in order to sort through tremendous amounts of data and find patterns of behavior that we can match to threat actors, the way that they try to come into an environment, the software that they use in those tactics and techniques. And a platform like that can filter through a lot of data and find those patterns is the key to being able to protect an organization. So it's home built for both Sophos and for SecureWorks, their Hub platform and our Taegis platform. It just makes a ton of sense to be able to take the best of both worlds and put those together.
All right, so you and I, Wendy, we first chatted back in 2021. How has your company, how has the industry changed over the last several years?
The industry is, I think, on a path for the first time in a long time to really consolidate. And that is, frankly, as a result of customer demand to be able to run a holistic security program, understand, frankly, quantify their risk, demonstrate where they've protected against that risk, and then have the accountability around who is attacking their environment and how they've protected against it for their boards and C-suite. It's become a boardroom topic for the last couple of years. And so the ability of a security professional to elevate sort of a technical pursuit into the language of business and risk is probably the biggest change that I've seen over the last few years.
I want to zoom out and just talk about the cyber industry more broadly and how different corporations should be thinking about the current state of threat to their businesses when it comes to cybersecurity. Are we worse off than we were maybe 5 years ago as hackers get more advanced?
I would say that the great things about AI that have enabled us as businesses or security companies to leverage the power of that AI has also represented a certain amount of peril in terms of empowering those threat actors as well. And whether it's nation states or cyber criminals who are involved, their ability to use the same sort of natural language processing technologies to make that phishing email much more believable. It really does look like it's coming from your bank or from a vendor that you use. And so the last line of defense always beyond technology is people. And the need for all of us to become more educated and just cyber aware is more important than ever. So there's always that human edge that can make the difference on top of technology to keep us all a little bit safer. When cyber criminals cannot make money off of global citizens, then we start to break that economic model.
All right, Wendy, thank you so much for joining us. Wendy Thomas, she's the CEO of SecureWorks. That's a publicly traded company. SCWX just recently, in the last couple of days, agreed to be acquired by private company Sophos in a deal for $8.50 per share in cash, which was a pretty solid premium to the pre-deal talk there. And Sophos is owned by the private equity firm Thoma Bravo. So more consolidation in the data security business. It seems like an area that is just going to get significant investment for as far as the eye can see, because I mean you have to continue to, I think, invest in cybersecurity, because as you mentioned, Emily, the state actors, the private actors are just getting smarter and smarter and more aggressive.
Exactly. You'd imagine the threat just gets worse.
Yep, absolutely. So some more consolidation there in the data security, cybersecurity business. S&P 500, a little bit of red on the screen, off about 0.3%. That's 20 points. NASDAQ's off about 0.5%. The Dow's off 230 points. McDonald's contributing mightily to that 220-point drop in the Dow Jones Industrials. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Emily Gaffrey sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there as well. You just have to search Bloomberg Podcast, and that's where you'll get us. AT&T, telephone as we used to call it, T is the ticker, reported some earnings, some pretty decent earnings. I'm looking at the stocks of about 2.6% today. It's up 31% year to date. How about that for Ma Bell? John Butler joins us, senior telecom analyst for Bloomberg Intelligence from Princeton. Hey, John, talk to us about AT&T, then we'll broaden it out to kind of the broader wireless space. But what did you see from AT&T this quarter?
Absolutely, Paul. So Ma Bell delivered is what I would say. They actually had a very steady quarter. The one thing I've always liked about AT&T is they are the steady hand in the telecom space. Unlike technology, for example, in telecom, I always say a millimeter is a mile. You know, they edged out expectations on key metrics, particularly in wireless. And so, you know, steady as she goes. Really a good story, and it continues to be based on what I saw this quarter.
So they gained more mobile subscribers in the third quarter than analysts expected. Where is that coming from? Is that people switching from a competitor to AT&T?
Yeah, Emily. So what we're seeing in telecom is the market is largely saturated. So when you see gains at AT&T, it's typically coming from other carriers. We're also seeing a big migration coming out of the prepaid business as carriers like AT&T take their best credits out of that category and sort of elevate them into the low end of the postpaid space. The other thing we're seeing are second lines. So a lot of people are actually getting second cell phones or adding an additional line to their phone. And so we're getting what I term second line growth as well. So it's really a combination of those factors that's at work there.
So, John, let's kind of zoom out a little bit and look at the wireless space in general. We got, Verizon, AT&T, T-Mobile. I mean, you got three big players. And the pie's not growing a whole lot, I don't think. So how do investors think about where to lay their wireless bets here between those three names?
So let me take it from the top. T-Mobile continues to be the growth name in the space. They have, I think, the strongest brand. They've been out there with a consumer-friendly brand. It's very splashy. It resonates well with young people. When you look at those net new subscribers coming in every quarter, T-Mobile just continues to beat quarter in and quarter out. As I said a moment ago, AT&T is the steady hand. They're growing steadily. They're executing very well. And then at the low end of that spectrum is Verizon. They've had some trouble. They've been losing share in recent quarters. They're starting to make the turn, so it's going to be interesting to see the industry dynamics here as Verizon on the margin gets better, I think, in coming quarters. So we're watching that. But in terms of how the stack lays out now, that's where it is.
How are you thinking about AT&T and these other wireless providers versus the traditional telecom companies? Because we've learned in at least the AT&T earnings reports, they're trying to get more into that traditional telecom business, laying out broadband, fiber. Is it working?
Yeah, so if you look at the history of telecom, AT&T and Verizon are the old regional Bell operating companies. There are a number of them put together, actually. And so they both still have a wireline business, a fixed line network that they're using now to deliver and really grow in the broadband space. And that is causing convergence with the cable industry, right? The cable operators are now getting into wireless, and telcos are all leaning into broadband and having very good success building share and taking share from the cable guys. So that's going to continue to play out in coming quarters. And I think the competitive edge that the telcos have is a lot of their networks are built on fiber. And so fiber is the best long-term solution for broadband. It's the highest capacity, and it stands up very well to environmental pressures.
How did the cable companies then, John, compete? What's their competitive, strengths versus, AT&T and Verizon?
I think so. Great question, Paul. On the broadband front, they're trying to upgrade their networks to what's called DOCSIS 4. It's going to give them the ability to offer the same upload and download speeds, which they can't do now. The download speeds are very fast, but the upload speeds are rather slow. So you don't get that symmetrical service, but hopefully coming soon. And I think on the wireless side, they're capturing a lot of share at the low end of the market. They're coming in with some very compelling offers, and it's working. And they're taking share from the telecoms and wireless.
Interesting. All right, AT&T out with some earnings. Stock actually has been a really good performer, not just year to date. Stock's had a nice performance, up 31%. I didn't think it was that good. I can't remember the last time AT&T was such an outperformer. On a trailing 12-month basis, up 47%. So it's finally getting some love as they focus on their telecom business and get out of that silly investment in media business. John Butler, senior telecom analyst for Bloomberg Intelligence, joining us from Princeton, breaking down the wireless business. I'm a Verizon Wireless, and I just upgraded my phone to the Apple 16. In and out in like 20 minutes. They did everything for you. It was a great customer experience. So I don't know. I've been Verizon ever since they've had cellular telephone service, period. I don't know what else. So I wouldn't even think about switching. But Charlie Pellet, he's a T-Mobile guy. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Mandeep Singh, get the latest on the world of technology. ARM, Qualcomm, I'm not sure if we're going to get a deal there. So we'll get the latest from Mandeep Singh. Jumana Persechi joins us. She's a Bloomberg television anchor on what to expect at the Bloomberg New Economy conference down in Sao Paulo, Brazil. So she's going to join us remotely from Sao Paulo. So that should be pretty cool. Lorene Gilbert, CEO of Wealthwise Financial, joins us to give us her outlook for these markets. So we got a lot coming up today. We're going to talk with George Ferguson of Bloomberg Intelligence. What's going on with Boeing? All right, it's like our daily check-in on what's going on with our friends at Boeing. But right now, let's go to Mr. John Tucker and a Bloomberg Business Flash.
All right, Paul and Emily, stocks extending losses into a third consecutive session. NVIDIA, among the most active right now, it is down 1.5%, leading the mega caps lower today. Qualcomm also getting hit. It's down 1.9%. ARM Holdings canceled a license that allowed the company to use its ARM's in intellectual property to design chips. Despite all the volatility around the election, remember that? Ben Gutteridge at Invesco remains bullish of equities.
Despite hedge funds, whacking on and taking off trades, from one day to the next in and around the event, stock markets can get through this in a positive, would get through this in a positive fashion.
Right now, the S&P 500, 28 points lower, down 0.5%, 58.23 on the index. The Dow Jones Industrial Average, 280 points lower. That is down 0.7%. And right now, the NASDAQ 100, 132 points lower. That is down 0.7%. On the data front, existing home sales dropping to a 14-year low in the month of September. A lot of people just waiting for rates to tick lower. Not getting that today because we see the 10-year up 3 basis points, 4.24 right now. The 2-year is 3 basis points lower, higher, I should say, 4.06%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Emily and Paul.
All right, John Tucker, thank you so much. We appreciate that. Emily Griffeo sitting in for Alex Steele this morning. I'm Paul Sweeney. We're live from the Bloomberg Interactive Broker Studio, also streaming live on YouTube. So you can go over to youtube.com and search Bloomberg Podcast, and that's where you will find us. As John was just reporting, we got some selling today, some selling pressure for sure. Let's look at some individual names because we have a lot of companies reporting earnings, and we want to stay on top of some of the big names and the big movers. We can do that with Nora Melinda. She covers the equity markets for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Nora, what are you looking at?
Well, let's take a look at AT&T. That's ticker T. We're seeing shares up as much as 2.7%. Now, this is after the company reported that it gained more mobile subscribers in the third quarter than expected. It added 403,000 net new monthly wireless phone subscribers, and that beat estimates of 394,000 94,600, according to data that we have here. Revenue was a little changed from a year earlier, but in comparison to analyst estimates, the company is seeming to do pretty well. It did say that severe weather and a worker strike are affecting broadband, but we do have a look here on sales, as we do know that Verizon just recently reported earlier this week as well.
All right, so, what else you got here? Boeing, what's happening there?
Yeah, I mean, always keeping an eye on Boeing here. Lots of news to come out of this stock. But this, what's going on here today is that the CEO said that its company woes will still take some time to fix, especially as we're thinking about all the things that Boeing has gone through this past year. And as you mentioned earlier, Paul, they will be having the union vote. We're still waiting for results on that, but that is due later today. And when we're looking at it on a broader scale, shares of Boeing are down 39% this year. So really a lot this CEO has to do in terms of that turnaround story there and to make investors happy.
Yeah, I saw somebody reporting, or just on social media last night, saying, you know, Boeing just kind of kitchen sinked it right here, but just kind of threw everything out there in terms of, you know, trying to get all the bad news out there so this new CEO can maybe reset here. But, but job number one is to get this strike settled, because it goes
it's an overhang.
It's a huge overhang, and it's really causing them, you know, just bleeding cash flow, because if they can't deliver the planes, can't make the planes and deliver the planes, they can't bring the cash in. So it's really imperative for both sides, but particularly I think for Boeing. Now they do have some options. They've got a shelf offering out there to raise up as much as $25 billion to support up the balance sheet and basically signal to the workers, hey, we got lots of cash. We're not too worried about it.
Yeah, is this a case where, like, you know, who folds first? It's like, can the company hold out longer than its workers?
Right.
I think it is.
It's definitely a battle here.
Yeah, because George Ferguson from Bloomberg Intelligence, he brought that up. I didn't even think about it when they filed that shelf registration. It was just kind of a negotiating ploy, in addition to, A, they do need the money, but B, it's a negotiating ploy saying to the striking workers, we got plenty of cash. We can last a long time. So how about you with your paychecks missing? Can you last as long?
Right.
So a little bit of back and forth there, so we'll see.
To see who folds first.
All right, what else do we got here? Spirit Airlines, what's going on there?
Yeah, so Spirit, I mean, this name is just so interesting to me as we've been kind of chronicling this through the year. I was last looking, and shares are currently trading below $3 now. But today we have the stock surging as much as 50%. That's its highest intraday level since July. It has pulled back a bit, but this is after news that Frontier could be renewing its merger bid for the company, and that's really taken shares up quite a bit. But when we look at it on a broader scale, we do know that Spirit is down 80% this year as we are sitting here in October, but it does seem like this is kind of the final stretch. I thought we'd already seen the final stretch, but apparently we have more here with the story here for Spirit.
Yeah, so we'll have to see. I mean, it's a really tough thing. We remember they were going to have a merger with JetBlue.
Right.
And that did not get approved by the regulators. And so now what you have left is a struggling airline. So thanks so much for all of that, Norma Linda. Norma Linda, she covers all the equities for us at Bloomberg News. I'm looking at this news here. I'm trying to read in and get a little bit smarter here about this whole, in the tech space, in the chip space. ARM Holdings is canceling Qualcomm's license to use ARM's intellectual property to design chips, escalating a legal dispute over smartphone technology. The cancellation gives Qualcomm 60 days to remedy the dispute, and if it takes effect, Qualcomm may have to stop selling products that account for as much as $39 billion of its revenue, and this dispute threatens to disrupt the smartphone and personal computer market. So it seems like a big deal in the world of chips, and who gets to use whose chips. I have no idea what's going on here, but fortunately I know somebody who does. That would be Mandeep Singh. He covers all the technology stuff for Bloomberg Intelligence. So Mandeep, what is ARM Holdings? Who is Qualcomm, and what's their deal, and what's the trouble?
Yeah, so ARM provides the IP building blocks for Qualcomm to use in their chip design. And the best way to frame IP building blocks is this is like, a programming paradigm at the chip level, where how you program the chips, the framework for that is provided by ARM. And they've been using it for years. Like the best comparison is Intel's x86. That's the competing architecture. I mean, look, ARM gets royalty from every chip that gets sold, whether it's in the smartphone or in the server. So in this case, they are asking ARM to pay more royalty fees for using their architecture, and this is not new. If you go back in time, 2 years back, the same thing happened, and they settle out of court. Essentially, ARM's problem is everyone is benefiting from more semiconductor content on the chip side, whether it's NVIDIA or Qualcomm, and they get a fixed royalty fee. So they want to raise prices in a sense, and this is their way to negotiate, with Qualcomm. The problem they have is they only have a handful of customers. I mean, you can't go to Apple and raise fees to them or to NVIDIA because they are signed into 20-year contracts. So they're going to Qualcomm because the contract is a little bit more flexible, and they're asking them to raise the fee, or they have to go to the end device maker, whether it's Samsung or a car maker, and have them pay the fee because, in a sense, those guys are licensing technology from Qualcomm. So there aren't many customers for ARM, even though their technology is used quite widely if you think about the products where ARM designs are there.
So what has Qualcomm said in response?
Well, I mean, look, this is going to probably go to the court. Everyone believes they're going to settle out of court because Qualcomm's chips are designed on ARM technology. So if they were to look for a replacement, which is RISC-V and open source IP architecture, this would be like huge in terms of, a product change. So they'll probably end up negotiating and paying a higher fee. But the way these companies negotiate is they go to the court, and before the hearing or during the trial, they settle out of court.
So you mentioned some of these contracts that ARM has for its chip design with, say, an Apple.
Yeah.
Are 20 years?
Yeah.
Like if I had, okay, why are they so long? Because that would limit my ability at ARM to change pricing.
I mean, this goes back to how ARM was started and, the history of the company. Apple was instrumental in using ARM designs. And when they made their phone, they made a decision not to use Intel's architecture, but to use ARM. And at that time, these contracts were signed. Same thing with NVIDIA, very long-term contract. Everyone talks about how NVIDIA has the pricing power. They have a long-term contract with ARM for licensing their architecture. So every supplier to NVIDIA right now is thinking of ways to raise their prices, whether it's TSMC or ARM or anyone else who supplies to NVIDIA, because they've seen NVIDIA commands all the pricing right now. So they want to participate, I guess, in that trend in some way.
So Qualcomm basically has to give in, right, to whatever ARM wants? I mean, is there any room for negotiation? It just feels like there's...
the other aspect of it is Qualcomm is a 10% customer for ARM. So if Qualcomm decides they are going to use some other architecture, ARM loses 10% of their business. So I guess it goes both ways, the dependency. But at the same time, nobody wants to really blink first in terms of Qualcomm paying whatever ARM is asking for, or ARM not being able to raise prices. Yeah.
Well, I'm looking at the American Depository receipts for ARM. I mean, the stock's up 95% year to date. So it's not like they're not getting credit for being an AI story. Now, granted, it's not up 190% like NVIDIA is. So again, I could see ARM saying, hey, we're not getting full credit, full valuation for our
ARM's
stuff.
valuation right now is bigger than Intel.
So yeah, you're right.
30 times sales, or the expectations are high for them to keep growing at least 25%, 30%. So for them to sustain that top line, and as I mentioned, the customer base for ARM is quite concentrated. How do you drive that top line growth? You're not going to find a lot of new customers, so it's still these guys, but you somehow have to renegotiate the license fee, or figure out a way to charge these customers more, which is, I think, what they're trying to do.
I'm looking at the FA function here, and 23% in fiscal 25, which is March 25, 24% revenue growth forecasted for the March 26 year. So that's pretty solid.
That's solid, but I think they will have to sustain that to be able to command that kind of valuation. As I said, it is quite rich when you compare it to an Intel, which obviously it's quite beaten up. But I would argue Intel has a large portfolio of businesses compared to ARM, which is just a IP licensing company.
How does this feud impact the rest of the supply chain? I'm looking at the SPLC function on Qualcomm.
Nice.
This is one of my favorite
I like that one.
functions.
That's Alex's favorite as well.
Oh my gosh.
It's all the smart people.
I'm a good replacement for her today. One of the customers of Qualcomm, Apple, Samsung,
How does this affect the rest of the supply chain?
I mean, look, Qualcomm really is looking to raise prices for all their customers. The problem they have is some of these customers have longer licensing agreements, as I alluded to before, with Apple and NVIDIA. With other ones, Samsung, I think they will try to raise prices. It's just Qualcomm is the volume player. Think of how many smartphones have, Qualcomm chips in a year. It's probably, the other half of what Apple is selling has Qualcomm chips. So that's where being the volume player and being the largest ARM customer, they're able to raise prices. That does help ARM in a big way,
All right, Mandeep, thank you so much. We appreciate that. Mandeep Singh, Bloomberg Technology for Bloomberg Intelligence, covering all the tech stuff. Let's head down to Sao Paulo, Brazil. Jumana Brissett joins us. She's a Bloomberg television anchor. She joins us from the Bloomberg New Economy at B20 conference in Sao Paulo. Bloomberg New Economy at B20 in Sao Paulo is where business and government come together to set the agenda for economic development and transformation. Jumana, thanks so much for giving us a few minutes here. What is on the agenda? What should people expect from this conference down in Sao Paulo?
Yeah. Well, it's good to be on the show with you. Indeed, it's all kicking off in Brazil. We've got the B20 happening tomorrow. In a month's time, there's the G20, and then, of course, next year, COP. So a lot is centered around Brazil. Specifically today, we are hosting the Bloomberg New Economy Forum. And as you can imagine, the themes are ranging from all of the different disruptions that are about to hit the world, from climate change to AI, to geopolitical sensitivities, to war, to conflict, and of course to the direction of global growth. So it is an opportunity for industry leaders, for policymakers around the world to come together and discuss some of these issues. And top of mind is the trajectory of growth for the global economy. You may have noticed yesterday when the IMF released their World Economic Outlook that the biggest upgrade for growth that came through was actually for Brazil. So it's a part of the world that is a bright spot. Questions about what tariffs and protectionism could mean, not just for Brazil, but for the Latin American continent as a whole. That, of course, is a high feature, a high topic of discussion as we head into the US elections. And then digital disruption. Brazil is the perhaps most advanced digital country in Latin America. I just walked off a panel now talking about some of the challenges the regulators have here in terms of wanting to encourage innovation, but at the same time, make sure that the consumers are protected. And then finally, we are in Brazil, home to the Amazon, the lungs of the world. And so we're having a lot of conversations here about this push for decarbonization, whether the world is actually doing enough and whether enough capital is actually being mobilized from the global north to the global south so that lower income and developing countries also get an opportunity to decarbonize at the pace that is required. So all of these discussions are happening here at the Bloomberg New Economy in Sao Paulo.
Wow, that is a full agenda. You guys have lots to talk about, and I know you're going to have a lot of smart folks down there to kind of suss out some of these big issues. Jumana, thank you so much for giving us a few minutes of your time to bring us up to date. Jumana Brissett, Bloomberg television anchor. She joins us from Sao Paulo. The Bloomberg New Economy at B20 in Sao Paulo is where business and government come together to set the agenda for economic development and transformation. As Jumana was mentioning, from Brazil, which is obviously one of the leading countries in Latin America, and presumably a lot of big topics there, Joe.
Fascinating story on the Bloomberg about the cycle of poverty in the Amazon, where you have the poor trying to grow food for their family, cutting down the Amazon, planting, and then moving on when the soil goes poor. And it's a cycle that just keeps going and going, and a huge problem.
A huge problem down there. So again, lots of big topics down there in Sao Paulo, and we're bringing some of the coverage from there. So that's some good stuff there. Looking at the markets, we got a little bit of a sell-off here. We have the S&P off about 0.7%. Down near the intraday lows. The NASDAQ is off about 1% here to 18,400 on the NASDAQ. Yields, 10-year Treasury, 4.23%. Keep an eye on that. WTI crude oil, it's a little bit lower here today, just under $71 a barrel. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Third straight day of declines for stocks. In the S&P 500, you have 9 of the 11 major industry groups. They are down. Consumer discretionary, that's the biggest drag. That's where you're going to find the restaurants, including McDonald's. Those shares 4.9% lower after the E. coli breakout that also resulted in one death. We're also seeing a big drag from technology today. Shares of NVIDIA, they're actually the most active in today's trading. They are down 2.4%. And the Treasury sell-off, that continues. The 2-year yield 3 basis points higher at 4.06%. The 10-year yield, that is up 2 basis points right now. That is hovering around 4.25% for the benchmark. S&P 500, 37 points lower, and that's down 0.6%. We're at 58.13 on the index. The Dow Jones Industrial Average is 351 points lower. That's down to 0.8%. The Nasdaq 100 is down 182 points. That is down 0.9%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Emily and Paul.
All right, John Tucker, thank you so much. We appreciate that. Emily Graffeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio in New York City. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast. And speaking of YouTube, what would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. Visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partner, Material. Fill it out now at youtube.com/Bloomberg Podcast. So there you go. Let's get a sense of what's happening with these markets. John just reporting we have a sell-off in place here today, but otherwise we are at or near all-time highs for these markets. We're right smack in the middle of earnings, so it looks like people feel pretty decent about the earnings that are coming about. Let's check in with somebody who does this stuff for a living. Lorene Gilbert, CEO of WealthWise Financial, joins us via Zoom from Dallas, Texas. Lorene, thanks so much for joining us here. What are the discussions you're having with your clients these days as they had a pretty good 2024 year to date, both in stocks and even bonds are giving you some pretty solid returns? What's the conversation like these days?
Well, it has been a really good year, and what's on everybody's mind is the upcoming election. And it's interesting to see how many people are holding this wait-and-see mentality on what to do with big life decisions, whether it's buying a house or making a move with a business. A lot of people are just playing wait and see. So the talk has been, how will this election affect my portfolio? And to that question, we say there shouldn't be a lot of allocation changes based on the general election, because we already know that this year is a positive year for the market, so we don't expect that to change. It's been a fantastic year across the board. And so the real question is what happens next year? And to that, we look to Congress. So more important for the markets would be what kind of legislation could be enacted in Congress. So who controls Congress could have an outcome as to what happens on corporate tax rates, on individual tax rates, on regulations. So all those things are of concern to people.
When you think about where we are right now in the business and economic cycle and markets, is there still room for this bull market to run? We just had 6 straight weeks of S&P 500 gains. That was the best winning streak for the index all year. Where are we? Are we still early? Are we mid-cycle? What do you think?
Well, we're in a late cycle, there's no doubt, but this rally now is 2 years really in the making, and the odds would say, or the history tells us in the markets, that there is still room for this market to run. So we're of the opinion that the market continues to run, that we'll see, right now we're seeing a pause in the market. A lot of that is profit taking from stocks. So even, looking this morning at Nextera that reported and beat on earnings, missed a little bit on revenue, but but at the end of the day is still flat on the price. And so there's been definite profit taking. Coca-Cola is another example of reporting and then the stock going down. So I think what we're seeing is some profit taking before year end, a pause. And yet I will say, we think there is definitely room to run. And in fourth quarter expectations for earnings are very robust. So while third quarter is somewhat muted on year-over-year earnings, fourth quarter we're expecting quite a bit.
Lorene, I kind of grew up in the age of the 60-40 portfolio, but I know that's kind of a thing of the past. That in fact, a lot of not just institutional investors, but retail investors like to have some alternatives in their portfolio, whether that's hedge funds, private equity, private credit. How does that conversation go with you and your clients?
Alternatives definitely have a place and a space, and it all depends on the liquidity of the client and their risk tolerance, definitely. Equities, public equities, there's nothing that can replace that because of liquidity and long-term growth as well as dividend income. So your equities have a place right now. We were talking about bonds have done very well, and the expectation is over the next 5 years, we see the bond market being very robust as rates come down, and that trend will be our friend, so that we'll see long-term, what I mean is 3 years to 5 years, some robust returns on fixed income. So we can't negate that or neglect it. And so then you are left with alternatives as well. And what alternatives can do is diversify a portfolio. There are liquid alternatives and there are non-liquid alternatives. So making sure you're using probably a combination of both of those, whether it's hedging a portfolio, looking to commodities are considered in a sense an alternative, looking at private equity as a long-term hold. So there's lots of different avenues and ways to play it. Macro, looking at macro elements too. So lots of ways to play alternatives, and we believe in that. We've got a double-digit allocation in alternatives in our portfolio.
I know you had mentioned that the election not really a kind of a longer term concern for investors, especially those who have maybe a longer time horizon than traders. So when you do think about maybe the next year ahead, what are the risks to the market and your outlook?
Yeah, so it really is, there is a risk. The risk is we go into a recession. And looking at history, during a rate cut cycle, most of the time that's very positive for equity markets. And the reason it's positive is if you can go into a rate cut cycle and avoid a recession, then the markets do quite well and have double-digit returns. If the rate cut, then we go into a recession, then we're going to see negatives on stock market prices, no doubt. Now, we believe that we're going to still see continued growth in the economy. We don't see this economy, even though the leading economic indicators we're seeing going down, we don't think that that means we're heading right now into a recession. So if we can avoid a recession, we see the stock market doing quite well in 2025. So right now, our base case is that there's not a recession, that the Federal Reserve continues to lower rates, and that the market will continue to rally.
All right, Lorene, thank you so much for joining us. Lorene Gilbert, she's the CEO of WealthWise Financial, joining us from Dallas, Texas via that Zoom thing. Let's get back to stocks and earnings. Another big company reported earnings that gives us a good snapshot on the global tourism business. That's Hilton Hotels. Hilton lowers its profit outlook with travel demand growth slowing, so they kind of cut their 2024 profit guidance. Let's break it down with Brian Egger. He covers all the hotel companies and all the leisure companies for Bloomberg Intelligence. So, Brian, what's Hilton saying about their businesses globally?
So overall, the picture has changed slightly to the more conservative side. And I think overall they're seeing still what we've seen in recent quarters with the U.S. kind of chugging along in a kind of a maturing cycle. China certainly down. I think the reason they modestly lowered RevPAR guidance for the full year was because of some weather, labor disruption-related factors, some bit of a macroeconomic slowdown. It's a nuance of a change. It's still overall a similar RevPAR growth outlook, but there is a somewhat of a kind of a nuance of slightly greater caution than we saw before. And I think it has something to do with timing factors, but also perhaps a little bit of the fact that the leisure traveler and the boom in leisure travel continues to be still well above pre-pandemic levels, but is tapering off its recent peaks.
How have some of these recent acquisitions gone for Hilton? They recently acquired the Nomad and Graduate Hotels brands.
I think those types of moves really enhance the company's efforts to build kind of a lifestyle presence similar to what Marriott has done, and I think they'll continue to do that. It really kind of fills things around the edges, because I think those types of lifestyle boutique offerings are similar to what other companies like Marriott and Hyatt have pursued, and I think these are sort of just tuck-in acquisitions.
Hey, Brian, I'm just looking at the stock price performance of these hotel companies, and I see that they've all had pretty good years here, up mid-teens to mid-20s%, but Hilton has been the best performing stock, up 28%. What's the market like about the Hilton story vis-a-vis maybe some of the others?
I think maybe the concern has been as we've kind of worked our way through the recovery from the pandemic, that it's the upper scale hotels like those that run by Hilton, Marriott, and Hyatt that have begun to outperform some of the limited service hotels, which is kind of the opposite we saw in the very early stages of the post-pandemic recovery. I think overall the industry has performed well, and right now, I think we'll see what happens going into the rest of the reporting season, but I don't think it's anything particular to Hilton, except that, like other of the high-quality, large lodging companies, they've really performed quite well, particularly on the leisure and business travel front.
So what have we learned from the most recent earnings about what Hilton is trying to do to get more people into their hotels and to spend more money at the hotels?
Yeah, they continue to grow their loyalty program. You mentioned, we've talked about earlier, some of the tuck-in M&A deals they've done. They continue to kind of expand globally with still a fairly enviable rate of long-term unit growth, 7 to 7.5% this year. So they're really kind of working that asset-light model, managed, franchised, filling it in with tuck-in acquisitions. That still continues to work. Obviously, there are questions about the sustainability of the recent growth pace with the economy, but that's really continued to work quite well for them.
And Brian, just geography, I know Hyatt and Hilton and the like are mostly in the U.S., maybe 80% of the revenue U.S. Is there anything that jumped out of them regionally?
I think what we're seeing, if you just look at the broad regional swath, what's happening across lodging, what we're continuing to see is that U.S. is kind of grinding along as it has been before. Europe has actually been reasonably strong. The one notable exception to the growth we've seen across the various regions for Hilton and other companies is China.
Yep.
And that's because of a decline in domestic travel. There was some weather disruption as well in this quarter, as the
Right.
concerns, obviously, maybe you'll get some benefit from a fiscal stimulus, but as the domestic economy perhaps struggles a bit, and as more of those consumers
Right.
maybe go outside of China, it helps other countries and hurts China.
Very good, Brian. Thanks for that update there. Brian Egger, he's a senior gaming and lodging analyst for Bloomberg Intelligence, joining us via the phone. Starting to hear from some of the hotels, Hilton taking down their guidance ever so slightly. According to Brian, that's enough just to knock the stock back a little bit, but still demand looks pretty solid out there. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, and the Bloomberg News with his Bloomberg Business Flash. Technology stocks weighing on the markets today. You have NVIDIA shares. They are the most active, down 2.5% right now. And then ARM Holdings, we had a detailed story about that earlier, canceling Qualcomm's license to use ARM's intellectual property to design chips. So this escalates their legal dispute over smartphone technologies. And you have shares of Qualcomm right now down close to 3%. Consumer discretionary, that is the worst performing industry group in the S&P 500. And of course, that's where you're going to find the restaurants, including McDonald's. The shares down 4.5% after the E. coli scare with their quarter pounder hamburger. Also, after 3 days of consecutive declines for the S&P 500, spoke earlier today with Julian Emanuel at Evercore ISI. He says, you know what, history dictates a bull case for stocks.
It's been a very good year for stocks, as we all know, and the work that we put out around Labor Day showed that actually in presidential election years where the markets were up double digits on Labor Day, you finished higher on December 31st, 6 times out of 6.
Right now, the S&P 500, 39 points lower. That's down 0.7%, 58.11 on the index. The Dow Jones Industrial Average down 337 points. The Nasdaq 100, 200 points lower. That's down almost a full percent for that index. And in the Treasury space, 2-year yields, they continue rising up close to 3 basis points, 4.06%. The 10-year yield is a basis point higher. That right now, 4.22. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Emily and Paul.
All right, John Tucker, thank you so much. We appreciate that. Emily Griffeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, and we're streaming live on YouTube as well. Boeing back in the news again today with some earnings. Not a good cash flow story. Stocks down 3.25%. Boeing CEO Kelly Ortberg provided an unvarnished view of his company at a crossroads, absorbed by challenges ranging from huge debt to serious performance lapses that it needs to address before it can consider developing a new aircraft. To break it down for us, George Ferguson joins us, Senior Aerospace, Airlines, and Defense Analyst for Bloomberg Intelligence. So what did you see in this earnings release, George? What did you hear from new CEO Kelly Ortberg as you think about this Boeing story right now?
Yeah, so I think you touched on the most important thing that we heard on the call. And I think it was that cash burn continues into 2025. Worse in the front half of the year. Something like in the back half of the year, cash, there can be some generation, but it'll finish the year negative, which really leads to me to believe, right, they got to raise cash here shortly because they don't want to dip underneath that $10 billion amount they need to run the company. I think also I found it interesting, away from his discussions on, the culture of Boeing and how it needs to change. I think everybody understands that. We all agree. I found it interesting, too. A couple analysts went at him about selling divisions. Didn't get a lot out of him, I think, on selling parts of Boeing to raise money. Look, I know he's busy. He's been first couple days, but my guess is they've looked at ways to raise cash, and we didn't think there was much potential to sell big chunks and raise cash, and it didn't sound like Kelly had any of those on top of his list either. So I thought that was the most interesting stuff.
What did the CEO say about the serious performance lapses that Boeing has had over the last year?
Yeah, I mean, what I heard was, the serious lapses. I guess he kind of owned up to them as well. But again, I think we all knew that, and that he thought companies still had potential for a very bright future. They're part of a duopoly, large backlog, and I think he understands that they need to bring back the machinists as soon as they can, in a way where they're happy and ready to build product well. And that's the path to success. And so, but again, I think he kind of owned again the problems of the company, But we've heard this before, right? I think now the question is, how do you change it? How do you turn it around?
All right, the most immediate, I guess, milepost for this company is settling this strike, and today is the day. The rank and file out there in the Pacific Northwest are going to vote today. Any consensus how this might go?
I'm not seeing any. I mean, I'm in the camp that it looks like he has a pretty good shot of it, because again, I think, you know, I've talked before that the union's been out now for about a month. So I'm sure they're starting to feel the pain of not having a paycheck, or at least a paycheck as large as they're used to coming in. They're pretty close to the terms that I think they're all looking for. I think the union might have been looking for 40%. I think they'll get, you know, 35 sounds pretty darn close. I don't know if you really want to hold out for the extra 5%. And they sweetened up some of the 401k matching and some bonuses. So to me, it feels like they're pretty darn close. And given the timeline since they last all worked, it kind of feels like he might get it tonight.
All right, so the long-term challenge, I think, for this company, and I just happen to know a couple of, you know, long-time, really right out of college engineers at Boeing, and it goes to that culture issue of, you know, the engineering first, maybe not necessarily profitability metrics first, but engineering first. That there's a belief, in, at least by some, that the company needs to get back there. A, does the company believe that? And B, is there any sense that they can actually do it?
Yeah, I mean, I do think they can. I think, again, it's going to take a wholesale, I think, change in attitude here. I do know people as well inside Boeing, and I hear a lot of stories about, you know, non-engineers running around with clipboards trying to figure out how to manage programs that are very technical, you know, in very technical programs. And so I think it will be hard to change it. I think they can't lose sight of profitability. And I think even Kelly, as he tells you, we got to get back to engineering and a manufacturing culture, he's canceling the 767 because he thinks the prospects for the future aren't as good, right? He said, look, this program was coming to an end anyways. Let's just get distractions away from us. So they can't lose sight of profitability, but they have to get back to engineering prowess and manufacturing skills.
The stock is down almost 40% or over 40%
This
year to date.
Yep.
Is there a sense in the investor community that we're near the bottom for Boeing?
So look, the other day, I think Monday, when you saw the announcement of, you know, the next proposal for the union and a vote coming, you saw the stock move. And so I think that alone is an indicator that, you know, look, on Wall Street and financial markets, hope is eternal. And there are some folks out there that think they see value in this.
When do you, if they do come to market with either debt or equity capital, George, when do you think that'll be? Now that they've got the earnings behind them, seemingly they have the green light.
I think that they want to see the vote tonight, right?
Okay.
And so my sense is it's come in late this week, next week. I think they want to see the vote tonight and figure out what they think they need, right? If Kelly doesn't get the vote, if the vote doesn't go his way, it's going to be a larger chunk coming out of the.
I see what you're saying. Yep, that makes sense.
Yeah.
All right, George, thanks so much once again for giving us a few minutes of your time. George Ferguson, he's a senior aerospace, defense, and airlines analyst for Bloomberg Intelligence. He's been our go-to voice here on really the last several years on Boeing when they've had these, you know, really serious safety issues, and doors, you know, flying off airplanes and things like that, cracks in the wings. And so they really need to, obviously, as they've been saying for a long time, get that focus back on quality. But now they've got the, I guess, the shorter term issue of managing this strike here, which again is, well, I guess into its fifth week right now. So they will have a critical vote, the machinists tonight. Will they support what their union leadership has agreed to with the company and end their strike? So again, a key vote today for the striking workers and for the company and for the industry. And you think about all the supply chains that fall back from Boeing, all the suppliers that supply Boeing, they're pretty much on standby waiting for this thing. So it just affects a lot more people and a lot more companies than just Boeing. So keep an eye on that. And that'll be breaking news tonight in Bloomberg. We'll certainly cover that as well. Looking at the markets, S&P 500 is off 0.6%. The Dow's off 320 points. That's about 0.7%. And the NASDAQ off 1% here. 10-year Treasury, we're sitting at 4.22%, up another couple basis points here. So yields grinding higher. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Sometimes a headline gets your attention. Boy, this one does. Cracked skull, fractured bones show danger at Rivian's factory. That draws you right in. So I want to get right to the reporter on this story. It's a big take story. We love the big take stories. Really cool stories, deeply, deeply reported, resourced, and sourced, and great graphics, all that kind of good stuff. So make sure good long-form journalism. Kyle Porter joins us, industrials reporter for Bloomberg News. Kyle, talk to us about Rivian. I remember talking to Bloomberg Intelligence analysts years ago, and they say, hey, the technology of EVs, that's one thing. But at some point, they got to go start bending some metal. That's another whole thing, entirely. And these companies don't have any experience in it. What did you find at Rivian?
That they're really struggling to build a safety culture that they can be proud of, in short. There's been numerous incidents, some of which you spelled out in the headline, others which we didn't put into the story, others which haven't been investigated by OSHA. If you talk to people out there in Normal, Illinois, a lot of them go to work every day because it's the best paid employer in the region, but they don't feel safe.
So, they only have one plant here. I'm wondering, how did Rivian, if I were starting up a new auto company, I'd just go over to Ford or GM or Stellantis, steal a bunch of their factory people and say, hey, guys, start building my car here. How did Rivian do it? How is Rivian kind of, learning on the job, if you will?
Well, Rivian got a deal. The plant that they have, they purchased for $16 million. It had been abandoned by Mitsubishi when they were trying to make an electric car in the US. So it's sort of all fell into place. There were still workers from the time that it was owned by Mitsubishi that could come in and work. So they felt that they could get some muscle memory. And then at the start, it was designed to be a very niche car maker. And then they got the Amazon deal, things exploded, and they had to ramp up.
So what's the company responding? Like, how did they kind of respond to this? Or do they have any policies in place to try to address this? Because I'm just looking at another great graph you have in the story that just shows the number of serious violations cited, and Rivian's at the top of that list.
Yes, it is. And as you pointed out, it's only one factory with 8,000 staff. Most of the companies on that list have multiple sites and tens of thousands of workers. The company... Oh, sorry, continue.
No, go. So I just want to know kind of how the company's responding here.
They responded in great detail to us. I think it's fair to say. They pointed out that most of the serious citations that they were issued were ultimately downgraded or in a couple of cases dismissed, which is true of most people that go through the citation process. And they pointed us to things that they've done to improve their safety processes. And indeed, OSHA itself has commended the company for being open and looking to improve its health and safety.
So is Rivian any materially different than, say, a Tesla factory or, the other EV makers?
Well, it currently only builds two types of vehicle. You have the Amazon truck, and then you have the R1, which comes in two separate models. It's an SUV and a truck, and they're looking to ramp that up with an expansion with the R2 next year. So it's smaller. I think it's aiming to produce, now they've actually cut their forecast for this year, about 50,000 vehicles. So the scale of it is much smaller.
Does Rivian have the money to invest in their plants into the safety? Because, boy, you look at the stocks of some of these companies, they're just so volatile. And I wonder if they even really have the money to invest in safety protocols.
It's a question to ask the company. That they say that they have a real commitment to safety and they are investing in it.
Is making an EV, I don't know, it seems like they're not building an internal combustion engine, so they're not actually building an engine. I would think the process is a lot different. Is it any more or less dangerous, as the industry said, versus, say, a traditional gas assembly plant?
Given that you're building this thing from scratch, from the engine upwards, there's a lot of process that has to be learned. There's a lot of things that need to be learned. Indeed, one of the things that the company was cited for was a movement vehicle that the engineers had designed and, wasn't safe for employees to use. They were telling employees to be careful until OSHA cited them and they figured out a way to do it differently. And you could replicate that across 1,000 examples, from how you attach the doors to how you put the glass in. You could go on and on and on. And Rivian's had to work out new and different ways of doing all these things for these new bespoke vehicles.
But the employees, I guess are they aware of the hazards when they take these jobs?
That's a very good question. It's rapidly becoming a company town. Most of the people that we spoke to for the story are one of several family members who work at the plant. They all talk about how when the plant first opened, it was very small, very welcoming. You saw members of senior management. It felt like a family. And as production has ramped up, that's gone away. And there's been a pressure just to produce.
Interesting. All right. Interesting story, Kyle. Appreciate it. Kyle Porter, industrials reporter for Bloomberg News. He's got the big take story about Rivian and working in their plant in Normal, Ohio. Some of the safety concerns there. You can read more of this story on the Bloomberg and at Bloomberg.com/big take. Looking at the stock of Rivian, it's down about 2% today. It's down 56% year to date. It's got a market cap of $10.3 billion. So again, reflecting some of the challenges of starting up some of these EV companies and the volatility around kind of the adoption of electric vehicles, which is really still, I think, pretty uncertain as to where the ultimate demand is for electric vehicles. We're seeing that in some, differing demand numbers we see out of some of these companies. Looking at the markets here to finish out this morning trading session, it is solidly red on the screen. The S&P 500, it is off 0.6%. The Dow's off 0.7%, and NASDAQ off 1% as well. Yields just a slightly higher, but certainly grinding higher. Well, from what we've seen here, we got the 10-year at 4.22% and the 2-year at 4.06%. So we are grinding higher on rates. Balance of power with Joe Matthew from Washington, D.C. We are getting closer and closer to this election, which means his show is more and more important than ever. That starts right now.
world of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Maybe it comes down to the company you keep. Welcome to the fastest show in politics. As the presidential candidates surround themselves with bold faces, we'll compare the strategies with these final 2 weeks with Bloomberg's David Gora live from New York. Early voting setting records in swing states, including Georgia. We just got new numbers a day after early voting began in Wisconsin. We're going to talk about it with Andra Gillespie, political science professor at Emory University. And as gas prices slip below $3 a gallon in more swing states, we'll have analysis, engage the impact with our political panel. Republican strategist, Bloomberg Politics contributor Rick Davis here, along with Democratic analyst Kristen Hahn from Rock Solutions. It's all after a look at Wall Street. We start, as always, by setting the baseline with Charlie Pellet in New York. Hey, Charlie.
Well, good day from New York. Lots going on, specifically corporate earnings. A lot of red on the screen right now, off-session lows, but right to the numbers here with the Dow, the S&P, NASDAQ, all declining. S&P down 36 right now, 58.14 where we stand, down 0.6%. Dow Jones Industrial Average also lower now, down 300 points, a decline of 0.9%. NASDAQ down 195, drop there of 1%. 10-year yield 4.22% with a 2-year 4.06%. Gold down $28 the ounce, retreating from a record $27.20 right now on the precious metal, lower by 1%. And Joe mentioned falling gasoline prices. We've got West Texas Intermediate crude slumping now by 1.4%, 70.75 a barrel. So what about markets and the U.S. election? Now under 2 weeks away. Alex Cheloff is Chief Investment Officer at Bernstein Private Wealth.
Well, it's too close to call. Normally at election time, I'm doing my best just to dodge and play down the middle. Thankfully, I don't have to do much dodging because it really is neck and neck. I think the bond market is voting Trump right now. They're expressing a view that fiscal policy will expand, and that's why rates are moving.
10-year, 4.22% again. The 2-year, 4.06%. Alex Cheloff with Bernstein Private Wealth. Boeing, lower after earnings. Boeing down now by 2.3%. Coca-Cola, lower after earnings. Coke shares down 2.2%. Rival PepsiCo also lower by 0.7%. The big earnings event after the close of trading, Tesla down now by 1.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues right now. Back we go to Washington. Your host, Joe Matthew.
All right, Charlie Pellet, thank you, sir, as always, watching Wall Street for us here on the fastest show in politics. We're live in Washington. Glad you came along here on Bloomberg Radio, on the satellite radio, and on YouTube, where you can find us right now by searching Bloomberg Business News Live. If you're already there, welcome. We always save a seat for you here in the studio as we watch the campaign trail here on the 23rd of October. Yeah, that means less than 2 weeks. And the final strategies here, we talk so much about closing arguments, are still coming to form as we learn more from each campaign. Let's talk about today, as we do every day, Kamala Harris in Philadelphia, the big CNN town hall tonight. I say big, we'll find out if anyone cares. Really has gotten to the point of whether they get themselves in trouble or not in these engagements. Not a lot of new policies rolling out, although, look, we just got the minimum wage thing, I guess, from the vice president, so maybe I should check myself. Donald Trump back in Georgia, early voting time. We're going to talk to Andra Gillespie in a little bit about these wild new numbers. They're setting records. Town hall there tonight, and there will be another rally in Duluth, Georgia later on. He's got a couple of events. J.D. Vance in Nevada today, Tim Walz in St. Paul, and he's going to be doing or I guess already did an interview for Univision Radio. These are really carefully selected outlets at this point. He goes to Louisville, by the way. What's up with that? He's got a campaign reception in Louisville later, then on to North Carolina. You might have seen Eminem on the stage last evening. This is the beginning of the big celebrity push here, right? Last 2 weeks. And it's fascinating to watch the people and the media outlets that both of the candidates are chasing here. You heard about Donald Trump. He's doing Joe Rogan. Later on this week, he's got a big event apparently planned with Tucker Carlson. as these two campaigns fight over suburban women. Kamala Harris, yeah, the Obamas are out. Barack Obama last night. Michelle Obama is coming. Eminem joining in Detroit. No confusion as to why in the critical swing state of Michigan. Let's bring it back to the rally from last night.
She worked at McDonald's when she was in college to pay her expenses. She did not pretend to work at McDonald's when it was closed. And she is as prepared as any nominee for president has ever been. That's who Kamala is.
I don't think anyone wants an America where people are worried about retribution or what people will do if you make your opinion known. I think Vice President Harris supports a future for this country where these freedoms and many others will be protected and upheld.
Yeah, that was Eminem talking there. If you're hearing us on the radio, or viewers on YouTube are watching all of this, didn't perform, right? He's not seen in the wild a lot these days, so I guess that was kind of a big deal for him to come out there. Barack Obama did more rapping than he did, as it turns out, on the stage. But if you want to get real about Detroit, okay, I'll take Eminem an 8 Mile all day long. But look no further than what took place on The Daily Show here. Insane Clown Posse's Violent J has also endorsed Kamala Harris for president. He tells The Daily Show, quote, "I want her to win because she's a Democrat, and I love my mom," unquote. I told you we're pulling out the stops. We even have David Gura with us. The Asset is live in New York. Bloomberg Radio's David Gura. Are you following along here, David? I feel like we should have a playlist to go along with all of this. I mean, as I started at the beginning of the hour, is this going to be decided on the company these candidates keep?
Well, you haven't mentioned Bruce Springsteen yet, and of course he's on the campaign calendar too for right. Kamala Harris, and he'll be on stage, I believe, with President Obama when they go to Philadelphia. We are seeing here a strong effort by Adrian Elrod, the Democratic strategist now affiliated with the former Biden, now Kamala Harris campaign, who handles all of these surrogate appearances. Making all of this happen, and I think as I watch it unfold, it makes me think a lot about those undecided voters, those phantom undecided voters, but more so how the Harris campaign in particular really wants to get people who might be considering not voting out to vote. So not trying to reach the undecided voters, but those who might have some hurdle in the way of them getting to the polls, trying to get them excited once again. So you have ticked through all of these star-studded appearances that we are seeing from the Democratic candidate. I think the focus here is in these last 13 days to maybe speed up the momentum, at least keep the momentum heading into the election.
Mm-hmm. Get us talking about him, or keep us talking about him, right? Gotta say, don't forget Insane Clown Posse if you want to look at Detroit.
It's not on my bingo card, I must say.
Well, I know now. I'm just bringing you in on this, David. We got to do this together. You mentioned Bruce Springsteen. There's the Joe Rogan interview at the end of the week for Donald Trump. Who's talking to the bros more? By the way, when I say bros, I get angry tweets. I don't know if that's insulting somebody, but I'm a guy. I thought I could say that. The fight over the bros. Who's got the asset when it comes to the campaign?
Look, I think that former President Trump is really going hard after this part of the electorate, and so that appearance on Joe Rogan's podcast, which has a huge audience, we should say, is an important one. And we know that Vice President Harris has been negotiating about being on that podcast as well. So it's clear this is a contested block of the electorate. I focus on what Elon Musk has been doing and is doing in Pennsylvania. Many of the bros do like Elon Musk and admire what he's done and is doing. So I think that if anything's crystallized here for me, it's how much the Trump campaign is kind of doubling down on trying to get those folks to the polls. But we know historically these are some of the trickiest voters to get to the polls. Apathy, whatever it is, keeps younger people from voting on election day. So we'll see if that bears fruit. But I think that podcast is something, again, I think both candidates have been wrangling with and thinking about doing. And I'm very curious to see if Vice President Harris does in fact make an appearance on there before the election.
Same. It's really just fascinating. You know, when we were growing up, you had to do the Tonight Show after Bill Clinton did Arsenio. There was just sort of a list of shows you had to do to look real. It's not so much like that anymore. We're going after these very thin slices, these specific demographics through podcasts that are geo-targeting their ads and their content at these people, including David Tucker Carlson. Of course, needs no explanation here. He's going to appear with Donald Trump in Atlanta coming up here this week, and I believe tonight, as a matter of fact. Then they're also hoping to do a Halloween show in Arizona. in what is being called an election special grand finale of the Tucker Carlson Live tour. I mean, if this election is going to be decided by suburban women, what do you make of these late choices?
Look, we have seen Tucker Carlson leave Fox News, build his own brand, do a lot of these live events, and sure enough, people show up for them. So it's interesting to see how the former president is hitching his wagon to that star, and I wonder candidly how he, the former president, will do competing for attention with Tucker Carlson at an event like that. But to get back to your point about geo-targeting, I mean, none of the things that certainly the Harris campaign is doing is by accident. They are looking at all of these podcasts and who listens to them and where those listeners are. You mentioned at the top that Governor Walz is doing these kind of local media interviews in Minnesota, yes, Univision Radio, but others. And that's how it used to be done, and those were the slivers that you'd try to reach from, one broadcast position. You'd go to all of these various markets. It's a whole new ballgame, and our colleague Ashley Carmen, who covers audio and podcasting in particular, has really written well just about how this is a podcast election. And I think a lot of care and attention is being paid by both of these campaigns on what are the shows, as well known as they might, widely known as they might be, that are going to get the most attention with the voters that they're hoping to get.
Well, this is my opportunity to remind everybody that David Gura has a wonderful podcast that you should be subscribed to now with what we're talking about. Don't forget the Big Take podcast. I could listen to David Gura read the phone book. I think what I'm going to do, actually, after this election, when I try to get over the PTSD, I'm going to have David read children's books to me. Actually, no, yeah, I'm going to need you to read children's books to me. I can't even do the Big Take for a week. David, great to see you. I'll see you in New York in about a week, by the way. We've got a big week of coverage planned, although maybe I won't. I think David's going to be traveling the country in the swing states. Either way, look for and listen for David Gura on the Big Take. I'm Joe Matthew in Washington as we zero in on Georgia specifically now. We just have new numbers, and this is truly fascinating here. Brand new numbers that I got my hands on here from producer James. This is from the Secretary of State's Election Data Hub. Georgia now early voting as of 10:32 a.m. today. These numbers are something. 1,859,830 early voting ballots accepted. That puts turnout close to 2 million already in Georgia, 27% of registered voters. When you start looking down the list here beyond Georgia, we can do this. North Carolina, Wisconsin, Nevada. This is arguably the most important part of the story right now. 2 weeks, Election Day, yes, but people are voting now. And in some of the states where we get to see the actual party registration adjacent to the ballot, we're seeing Republicans do a much better job than they have in the past of getting out early, if you at least consider that to be a good strategy. And that's where we start with Andra Gillespie, Emory University Associate Professor of the Department of Political Science. Professor's back with us on Bloomberg, and it's great to see you. Andra, give us your take on what's happening on the ground right now in Georgia, where this election is already being decided.
Yes, well, voters in Georgia are choosing early voting in record numbers, and I think that says something about the debate about whether or not there should be an early voting season or whether or not Election Day should only be one day. Georgia voters, regardless of party, regardless of region, are choosing to exercise their right to early vote. And so that means as a policy discussion, we shouldn't be talking about trying to eliminate early voting. I think that there would be a lot of people on both sides of the aisle who would be really upset with this. The other thing that I think is really important. The other thing that's really important from this debate is that people have made up their minds already, and people knew this already. Yeah. I think this reinforces the idea that this is a base election, and the candidate who wins is the one who has the best ground game.
Tell me what that means for the RNC's effort then to get Republican voters out early versus some of the mixed messaging that we've heard from Donald Trump, who was calling this idea stupid as recently as a week ago.
Well, we'll still be testing this after the fact, but this does kind of lend credence to the efficacy of early voting and some of the efforts that the RNC was making quietly. We'll see whether or not people change their mind because Donald Trump actually said early voting was okay a couple of weeks ago. But I think we have to acknowledge the fact that the RNC had actually quietly been encouraging people to use early and absentee balloting. The other thing I think is also important to keep in mind is that before 2020, absentee and early voting had been the province of Democrats or older white voters in particular. And so if we think about why older people would be more likely to engage in early and absentee voting because of their age, because they can do so, they have flexibility during work days to go out early, or because it might be easier from a health standpoint to go out and vote early or to mail in a ballot, I think what we're seeing is a return to the equilibrium where early voting, it tends to be something that older, whiter voters do because our older population is less racially diverse.
Returning to the equilibrium, consider the balance then in Georgia between Tucker Carlson and Bruce Springsteen. You've got some real choices tonight, Professor. Tucker Carlson with Donald Trump in Georgia. They're going to have an event a little bit later on that apparently is going to be part of a Tucker Carlson program. Will be in the Atlanta suburbs at an arena in Duluth, Georgia, as Bruce Springsteen, meantime, gets on a stage with Barack Obama. Who are the audiences for these two very different presentations?
So I don't think that the audience members are going to be conflicted about where they're going to go. People are not going to be showing up to these events specifically for Bruce Springsteen or Tucker Carlson. They're also there for Kamala Harris and for Donald Trump. And I think the other thing that's important about celebrity endorsements, the literature in political science is actually somewhat dubious about whether or not celebrity endorsements matter in terms of persuading people to change their minds. The types of people who are going to show up to these events are already committed partisans who are already committed to Trump or Harris before they knew who was going to headline this particular rally. There's new data out of Harvard that suggests that celebrity endorsements do matter from a mobilization standpoint, particularly with respect to voter registration. Now, in Georgia, the voter registration deadline is a month before the election, so nobody knew was going to register to vote as a result of seeing these headliners at these events. But imagine what that impact could be in a state that has same-day voter registration like Wisconsin. So if you're in a state where the voter registration deadline is either 0 to 7 days ahead of an election, having celebrity endorsements could actually help get some new people to the polls. But I think the most important thing about rallies and the most important thing about celebrity headliners is the earned media. So we're talking about them. We're giving free advertising to both the Trump and the Harris campaigns because of the fact that they got cool people to show up for them at a campaign, depending on what your definition of cool is.
Earned media. Although I guess if you're Donald Trump, you're still spending $1 million to appear on stage at Madison Square Garden on Sunday night. A lot of people are compelled by this because he's not really running to win the state of New York. He might help a couple of Republican House members, but this is really seizing on the idea that this is a national election, right? And he's going to get a heck of a lot of earned media coverage, a lot of free media that's probably worth more than $1 million for a night at Madison Square Garden. Professor, how do you see it?
So, I mean, that certainly could be part of the strategy to the extent that there is a strategy. I mean, there are things that I question about Donald Trump's decision making, in general about this. If he is coupling this appearance with a major fundraiser in New York, then I would argue that that is a pretty sound strategy. And so the only reason for candidates to go to decidedly red or decidedly blue states and cities if they have lots of donors in those areas who can actually help build up the coffers of that campaign. But Donald Trump's forays into places where it's clear he's either going to win them hands down or he's going to lose them decidedly doesn't make sense unless you're thinking about other aspects of the campaign like earned media and like fundraising capabilities.
Mm-hmm. Yeah, it's difficult to gauge the strategy in some of these states. Of course, he was at Coachella about a week ago as well. Audra, where are you specifically in Georgia when it comes to the middle, the undecideds or the deciders, as the New York Times, I believe, was calling them in their most recent poll? You talked about the get out the vote effort and the ground game here. Are we beyond turning non-voters into voters or D's into R's or whatever this is, people who are uncommitted one way or the other, and simply going with the names and phone numbers that the campaigns have to get people out? That is what is going to decide this election.
Well, that small sliver of undecided voters doesn't matter unless the base turns out to vote at expected rates. If you have lackluster turnout amongst your base, you're not going to be able to make it up with a small sliver of undecided voters. So that's the important thing. The base always mattered. The base still matters. As for these undecided voters, some of them may be coy in terms of what they're reporting to pollsters. Some of them may be truly undecided. And I think the bigger risk here is that they don't show up to vote at all. And then there'll be a question of, well, how are these people breaking? One of the things that was really interesting is that the Atlanta Journal-Constitution released a poll in Georgia last week, or yesterday, and it suggested that 8% of respondents were undecided in the race. If we break it down by race, it was a higher percentage of African-American voters who were saying that they were undecided. Again, the coyness discussion, I think is certainly on the table with this, but this may also suggest, that the campaigns need to do more outreach in these communities, and that there are people who might be withholding their vote until they feel that they've been properly contacted.
Right. Yeah, well, this is in many ways an endangered species, the undecided voter. Lastly, Professor, interesting move by the Georgia Supreme Court rejecting this push by the Republican Party to reinstate election rules that would have required hand counting of all ballots. We'll meet you back here in 6 months to see who won Georgia. Again, rejected, but there's a challenge to that most recent ruling. How is this going to end for Georgia by November 5th?
So I am only a casual observer of courts. I'm not a lawyer. I think it's a question of the timetable of whether or not with 13 days out from an election, there's enough time to file the briefs and have a judge issue a ruling before Election Day.
Mm-hmm. It's great to have you back, Andra. Let's talk again before everyone gets to voting. Andra Gillespie, with record levels of early voting around her in Georgia, Emory University professor in the Department of Political Science. Always great to spend some time together. Interesting conversation ahead with Zach Cohen. We haven't had Zach with us from Bloomberg Government in some time. He's just back from a reporting trip in the field. He's been in the swing state of Wisconsin looking at a really important House race that's going to be a bellwether, and one of the races that we're looking at on election night to get a sense of where the balance of power is going as we work our way through the time zones. That's coming up next, and we'll have a discussion with our panel ahead as well. Rick Davis and Kristen Hahn with us today on what is the Wednesday edition of Balance of Power, always including a look at Wall Street. Let's check in with Charlie Pellet right now and see how things are in the markets in New York. Charlie, what do you have?
Right now, lows of the day, Joe Matthew, the Dow, the S&P, NASDAQ all declining. Do want to begin, however, with an update on McDonald's. The company providing an update right now. McDonald's shares are tumbling down by 5.1%. McDonald's says it has not yet ruled out beef in the E. coli outbreak. Also says the outbreak is linked to ingredients and not stores. Again, McDonald's shares down now by 5%. McDonald's, of course, a member of the Dow Jones Industrial Average. The Dow now lower by 353 points, down 0.8%. Investors sifting through a number of earnings reports today. S&P lower by 45. Lows of the day, 58.06, down 0.8%. The NASDAQ Composite Index down 235, drop there of 1.3%. The 10-year, 4.22%, with the 2-year that's yielding 4.06%. Spot gold down $27 the ounce, $27.22 right now, down by 1%. And West Texas Intermediate crude, $70.77 for a barrel of WTI, lower today by just about 1.3%. AT&T after earnings surging 4.3%. It did gain more mobile subscribers in the third quarter than analysts expected. After the close of trading, we'll also be hearing from T-Mobile. T-Mobile up 1.3%, and the big, closely watched earnings report after the bell, Tesla. And Tesla down now by 1.2%. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thank you so much. Watching the street for us here on another day in Washington as we are watching the races and the issues that matter for you, along with early voting results coming out of some swing states now that are awfully compelling and help us paint the picture of turnout and potentially how the parties are reacting to get out the vote efforts here in some of the critical swing states like Georgia, where we were just talking to Andra. I want to move to Wisconsin, though, and the 3rd district. There's a House race there that I want you to know about. We're going to be talking about it on election night, and there's a big reason. Representative Derek Van Orden, a Republican, this is the incumbent, Wisconsin, first-term lawmaker, former Navy SEAL. You might have heard about him, because he is the only sitting member of Congress who who actually attended and took part in the protests, if I can call it such, on January 6th. He didn't go inside the Capitol. He says he left when the riots started to break out, but he was there. And this has become a central theme in the campaign by his Democratic challenger, Rebecca Cook. It's a great story that Zach Cohen has put together, having actually gone to Wisconsin to cover this race in person. It's a piece that begins in an Unalaska bar festooned with Green Bay Packers paraphernalia, where Zach sat down with Rebecca Cook to talk about the stakes, and he's with us right now, again from Bloomberg Government. Zach Cohen, it's been too long. Welcome back. It's great to see you, and thank you for getting in the field, leaving the bubble to have real conversations to understand these races. So I want to hear from you on this. What was most important to her? Was it January 6th?
Well, actually, I went there trying to figure out whether January 6th is so far into the rearview mirror at this point that other issues have come to the fore. And I did sit down with Rebecca Cook, who's a Democrat, a blue dog, a self-described centrist Democrat, who's running against Eric Van Orden, who is this first-term congressman from Wisconsin, who before his election to Congress was part of the quote-unquote Stop the Steal protests outside the White House and outside Capitol Hill. No indication he actually took part in the violence. He hasn't been charged with anything, certainly, in one of the largest law enforcement investigations in American history. But certainly something that's come up on the campaign trail. When I talked to Ms. Cook about this in La Crosse, which is one of the larger cities in the 3rd district, the most competitive House district in the battleground state of Wisconsin, she said, no, I mean, other issues like the economy, like the inability to afford rent and groceries are much higher on the issue set. If you look at her advertisements or that of Derek Van Orden, it's about the economy. It's about border security, despite the fact Wisconsin obviously quite a ways away from the border with Mexico. But it's still hanging out there. It's something that Cook has used in her fundraising. She's raised over $4 million, almost $5 million, to try to unseat Van Orden. And in this battleground district, that could be enough to juice some base turnout and maybe even convince some swing voters that Van Orden has to go.
So I'm assuming you talked to Van Orden, where Zach, you did this interview that generated the quote that I keep seeing everywhere. This must have been fun. Zach asking the congressman about January 6th, quote, do me a favor. Next time, do your homework before you ask me that question. What was he talking about?
I ran into Van Orden on a farm in Dunn County, a little bit north of Eau Claire, one of the other major cities in western Wisconsin in this battleground district. And he, after doing a tour of a dairy farm there and receiving a commendation from the Wisconsin Farm Bureau and some members that are supporting his reelection campaign, I asked him, there's a super PAC running ads right now talking about his participation in the January 6th protests and the argument from Democrats that is disqualifying for a member of Congress. And he said, do your homework. On that day, on January 6th, I left the riots as soon as they became violent. I called for the full prosecution of anybody who committed any violent offenses. But Van Orden has a history of being a little more cantankerous, a little more aggressive, especially to members of the press, so not something we were unprepared for.
Well, that must have been a fun day on the farm. So will this be a race decided by economic issues? And I ask you that knowing that Wisconsin is going to help decide the election here. It's part of the blue wall, and what's discussed at the top of the ticket is frequently echoing at the bottom.
I think it depends on probably how narrow the race is. There's always this but-for factor in a narrow race, but for the economy, but for January 6th. And certainly the narrower the race, the more important every single factor is. But certainly if you look at the advertisements from Van